Over the past several months, cryptocurrency derivatives markets have been heating up. Much like the spot markets on which they sit, the crypto derivatives markets seem to be beginning a sort of renaissance period. The stagnancy that hit the price of Bitcoin for months earlier this year pushed traders into altcoin markets, which has in turn created a new crop of interest and capital in altcoin derivatives markets. For a comprehensive analysis on the current and future trends in the crypto derivatives space, finance magnate spoke to Pankaj Balani, chief executive of Delta Exchange. Delta is a cryptocurrency derivatives exchange incorporated in St. Vincent. It offers futures and derivatives trading across Bitcoin and altcoins with up to 100 times leverage. Pankaj was able to share unique insight into the ways that cryptocurrency derivatives markets are currently developing. Before co-founding Delta, Pankaj acted as the head of derivatives strategy and sales for Alera Capital, a sales trader at UBS, and many other things. I'm Rachel McIntosh, and this is FMTV.
So first of all, Pankaj, I want to thank you for coming on the show. Thank you for taking the time.
Thank you, and it's a pleasure to be here. I was going to the archives and some really good content, so it's my pleasure to be on the show and talk to you.
Oh, great! I'm so happy to hear that. So I know who you are, but for somebody who might not know, can you talk a little bit about yourself and the work that you do?
Sure. So my name is Pankaj. I am CEO of Delta Exchange. We are a derivatives exchange. We do futures on Bitcoin, about 30 other altcoins. We have options on Bitcoin, Ethereum, and two altcoins at this point in time, BNB and Link, and we are going to come with options on many more. And we also have a few interest rate products on our platform. So we have interest rate swaps, which are fixed floating swaps, and we have them available on Bitcoin and DAI. So yeah, in that regard, our derivatives exchange is quite different from the others in market. We have a pretty sophisticated and advanced product offering. And yeah, we were also the market leaders in bringing altcoin futures. We started with launching BNB futures in August, September 2018, when nobody was really talking about leverage on smaller altcoins as much. Then followed it up by launching about, like I said, 30 more, and we continuously keep launching more and more coins. And yeah, we have other features like stablecoin margining. So we were the first to offer stablecoin margining in the market, and we've continuously innovated in this space. That's a bit about what we are doing. About myself, I come from a derivatives background. I was part of UBS Investment Bank in Hong Kong, working on the derivatives side. I spent some time there, worked on one of the largest Asian equity derivatives desk, traded with largest of funds. So that was a pretty good experience. Then went on and joined a hedge fund, worked on the gamma short side, so options trading, and then set up derivatives business for a London-based, boutique London-based bank in India. And then I joined two of my friends to start Delta, because when we looked at cryptocurrency derivatives market, it was quite a nascent market. It is still quite a nascent market, and we can go into that later. But yeah, so I joined two of my friends to start Delta, and yeah, it's been close to 2 years that we've been running it, and with good success. So yeah, that's my story.
That's great to hear. So what areas of the world does Delta primarily serve?
So we are a global exchange in the sense that people from across the globe can come to our exchange. There are some restricted regions. So so for example, US is not allowed. US customers are not allowed. Then some of the countries in Middle East and some sanctioned countries are not allowed. And certain regions are barred, which is pretty much in line with other global derivative exchanges like BitMEX, Deribit, and others. And yeah, customers from around the globe can come to us. We have people coming in from Europe, about 30%, about 15 to 20% of our customer base is from India, and we have seen huge growth in that space in the last 6-7 months. About close to 25 to 30 is from Southeast Asia. So pretty much around, pretty global coverage. Most of the English-speaking countries, dominated a little heavily by English-speaking countries. Yeah.
I see. So I wonder, in terms of where you see the cryptocurrency derivatives market growing, what are your sort of plans for development? Where are you aiming, and how are you hoping to get new traders onto your platform?
So So if you look at the crypto derivatives market, right, we are amid an explosion which is happening, and
Okay.
the rate at which we have grown in the last 2 years on the derivative side is phenomenal, and it is only going to continue from here on. And let's, the reason I say that and say that quite confidently is because I've taken examples from other markets, seen the growth that happens there, and let's look at some numbers. So if you look at equity markets, um, traditional, there are about 65 to 70 trillion of market cap outstanding across the globe, so all companies put together. And if you see the derivatives on top of it, there is close to $800 trillion worth of derivatives outstanding on them. Now, that gives you a number somewhere between, this varies between 8 to 10 times. If you look at FX markets, you have about $1.2 trillion of FX trading on a daily basis.
Mm-hmm.
And you have FX derivatives, which trade about $4 trillion on a daily basis. So the rule of thumb is derivatives market somewhere between 5 to 7 times the size of underlying spot markets. And this is not true for cryptos as of yet. So if you 2018 and January 2018, which was right after the big move that Bitcoin had made, so Jan to March period, and we were just starting with Bitcoin derivatives in crypto space. And I think volumes across all derivative exchanges put together back then were less than 1 billion on a daily basis, whereas spot volumes were much higher. So from there on, we have come to a point where there's parity between volumes of cryptocurrency spot and cryptocurrency futures or derivatives. But still, there's a long way to go. And, that is why there is so much to cover. So something that should be 5 times, 2 years back was 1/10. Now it is close to parity. And now I think in next 5 years, it is going to be 5 times the size of the spot market. And another important feature in this market, if you look at it closely, is most of the Bitcoin derivatives volumes are right now dominated by Bitcoin futures, and now to some extent Bitcoin options, and that has also happened only in last 2 months. And that has happened because for the first time we have seen Bitcoin volatility getting crushed and crushed on a sustained basis, so that and more sophisticated people coming in and shorting volatility, trying to capture the upside. So let's go back to microstructure. Now, so derivatives are at parity to spot. When I say parity in terms of daily volumes, but most of it is coming from Bitcoin perpetual swap volumes. Even Bitcoin futures have much lower volume as compared to spot markets. And when you go to further deeper into the space, so when you look at Ethereum, when you look at coins that like BCH or beyond that, BNB now, Link, and other coins, the volumes on futures or perpetual swaps is much lower as compared to the spot volume. And these are areas, these are pockets that will explode. These are pockets that will kind of show huge growth over the next 3-4 years. And when people start to use derivatives, so the big shift happened in 2018 when people found a way to short Bitcoin. That was the use case for derivatives for futures to become commonplace. That everybody after the bull run of 2017 was looking for the next trade, and the next trade was to short Bitcoin because it was going lower. So now people shorted Bitcoin, they learned how to trade on leverage, and that education part is complete. So now when markets are going up, there'll be participation on the upside as well using leverage, something that we did not see in 2017 rally. So most of the 2017 move up was spot dominated. There were people who were still trading on leverage, but most of the people were trading on spot, and most of the people were trading on just buying crypto. Now we will see people participating and looking to capture the upside, which means that they would come and trade a Bitcoin future or a perpetual swap or an Ethereum future perpetual swap, or a bunch of these other coins that are present on Delta, on now a few other exchanges as well. So yeah, we have continuously seen that trend change. We've seen the participation of altcoin volumes against the Bitcoin volumes continuously go higher, and we expect the team to continuously carry on. And another area that we expect to grow heavily is options, which has already happened for Bitcoin in the last 1 to 2 months. But again, much more possible from here on. This trade of selling options and looking to capture the, the premium that is offered by market volatility or options is a staple trade for a lot of traders in traditional markets. And we see more of that happening in cryptocurrency space as well. So again, options on Bitcoin and Ethereum will be quite popular. This is a space where we will see probably top 10 coins participate, not so much of the, the longer tail. And but there'll be huge growth in this area as well. So for us, we are concentrating on, like I said, we already have futures on Bitcoin. We already have futures on 30 other altcoins. We have built technology to be able to offer futures on 100 altcoins. And mind you, technology is going to be a big differentiator here because it is not that easy to offer futures or derivatives on very highly volatile asset class on too many assets, because your systems are under huge pressure. And this is not something that you can go and buy from CME or CME or any other, traditional markets that run number of derivative contracts, because they work very differently. Their margining is quite differently. They don't margin real time. They have a market open and market close. They have circuit breakers, which allow these exchanges to not margin customers during certain price movements, which is not the flexibility that crypto exchanges have. So crypto started in a 24x7 world, right? And it was unlike traditional asset classes that have a fixed time of trading, that have a fixed price band in which they can trade during a day. These are constraints that don't apply to Bitcoin and other cryptocurrencies. So margining and the way you build your technology is also going to be quite different. And like I said, we have been preparing for it. We were pretty much the first ones to go after the altcoin segment. So we saw the problems in that space. We have solved for them specifically. And right now we are pretty confident that if we want, we can pretty much open up 100 altcoins for trading today. The bottleneck there is how much is the liquidity on spot, because if things move too much during 1-2 ticks, then there is very heavy liquidations and you cannot offer that high leverage. So the liquidity on the spot side becomes a challenge, not the technology. Anyways, let's come back to what Delta is doing. So futures side we have this. On the options side, like I said, we already offer options on Bitcoin and Ethereum. We have started to offer options on BNB and Link, and we will be pretty much offering options on the first top 10 coins, and you would see that in next 30 to 45 days on Delta. And we are also at the same time focusing a lot on. So another theme that we see is that there's a lot of sophisticated traders entering the market now. So for the first time, we are seeing that institutional money is entering the market now, and in a sizable way. There was some money always, but in the sizable way, the flux is pretty good, you can say. And now that money is going to chase a lot of opportunities which they chase in traditional markets. So for example, trading spread between two different maturity of the Bitcoin futures. So right now trading the spread between December-September expiry. Trading the interest rate differential between perpetual swaps and the futures. Trading calendar spread on options, and we are building products that will help us capture all this volume. So we are launching calendar spread contracts that will be live on Delta in about 3 weeks time. We already have an interest rate swap for traders to capture the different interest rate differential between the perpetual swap rate on Bitcoin and the fixed futures rate on Bitcoin. And we are doing a bunch of these products. We're kind of using our knowledge on the traditional market side. We're kind of using the way we have seen those markets evolve. We've spent close to, between myself and my co-founder, we have spent close to 15 years in traditional markets, trading pretty much every asset class, equities, currencies, rates. And we are trying to, build all that into crypto. And in this, our third co-founder, who also looks at our technology and who's pretty deep into the understanding of cryptocurrency markets and have been following them for a long time. So we bring all this together, fit into the use case of crypto, and roll out products that the market will find demand for.
Right. So lots of really exciting things happening, it sounds like. I want to ask you a little bit about this liquidity challenge that you mentioned earlier. What is Delta doing to try and address that challenge?
So liquidity on spot, see, at the end of the day, crypto liquidity is good on Bitcoin, but yeah, it's still much smaller as compared to where a lot of big trades can be put on.
Yeah.
And this further dies down as you go, away from Bitcoin, as you go to a smaller market cap coin. And this is very natural as well. That's why the market cap is smaller, right? Because there's less liquidity, and so both things kind of feed into one another. So it's natural, but yeah, if you provide instruments that can help people hedge their positions, then you tend to increase liquidity. So, for example, there's a coin which offers very good staking yield, right? So, for example, Tezos. Let's look at Tezos in 2019, offering very good staking yield. Now, we started to offer futures on that. Now, what that does is it allows someone to buy Tezos in spot, short the future on Delta, and earn the staking yield without risking the money, without risking their exposure to Tezos. So let's say you take $100,000, you buy Tezos with it, and you put them to earn staking yield, and now you come on Delta and short $100,000 worth of future. So wherever the price of Tezos goes, it doesn't matter to you because you're completely hedged, and whatever staking yield you get is as long as it covers the cost of hedging. And then it's good for you because you have a trade which is yielding positive yield. And the return on Tezos was pretty good last year. So we were pretty much the first ones to start offering that future. Same thing with Atom, same thing with Tezos. We started offering futures on a bunch of these coins. And now connect the story. So earlier there was someone who saw that, look, I can put in 100,000 to Tezos and earn the yield. But I have a risk that if price of Tezos goes down, my 100,000 reduces in value. So I might not do it. But if there's a venue that helps me hedge that position and kind of de-risk myself from the price of Tezos, then I can enjoy the upside on the yield, right? Or I can enjoy the potential yield. And that kind of fuels the liquidity, both on the spot side and also on the future side. So it's good for us and it's good for the spot exchange. And it's good for the coin because they are getting more allocation, right? So it kind of fuels into one another. And that is what is the primary function of derivatives as well, that it helps in true price discovery. And when you have true price discovery, true price discovery can only happen with good volumes, and which is a very kind of an obvious statement that if you have lower volume, you can trade somewhere anywhere, but if you have enough number of people trading it, you will have better price discovery. So yeah, that essentially is a function of is actually the role of derivatives in the market, to be able to provide true price discovery and to reduce the long-term volatility. So in that regard, yes, whenever we launch futures on any coin, it helps the liquidity on spot as well, because it helps attract a lot more consumers who can hedge their positions, and it's better for the coin.
Okay, yeah. Really, 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 really cool stuff. So I want to ask you now also, you mentioned that you have the technology to be able to you're building the technology to be able to launch futures on 100 altcoins. So kind of what stage is that at? Is that already live on Delta, or is that something that's coming in the future?
It's already live. So like I said, we started offering altcoin futures way back in 2018, last quarter. So we, in the first few quarters of 2019, we realized that, look, offering 100 futures on 100 altcoins in a traditional market is very different than offering futures on 100, offering futures on 100 stocks in traditional market is very different from offering futures on 100 coins, because the way you margin is quite different, and this margin changes. So in cryptos, we do real-time margining. So let me, just take a small example to make it clear to, anyone who's listening. So essentially, what an exchange at any time is trying to do is basically running a risk check where it ensures that your losses are not more than the money that you've kept as margin, right? This is a very, very, this is essentially what is happening at the core of it. You should not have more losses than the money you have kept. Now, losses happens when price changes, right? Otherwise, losses cannot happen. Either if you're short and price goes up, then you incur a loss. If you're long and price goes down, you incur loss, or somebody incurs a loss.
I see.
Now, in a traditional market, because of circuit breakers and because of open close mechanics, risk checks are done at the beginning and the end, and at the end of the day, right? There is no need to do a risk check during the day, because you have kind of fixed how much you will let the market move. So if you know that the market cannot move by more than 10% during the day, the losses cannot be more than 10%. And if you have kept 15% of the position value, then there is no way your losses can be more than the money which is kept as margin.
Okay.
Now, that is not true in cryptos, because in cryptos, there is no open close. Market runs 24/7, right? There is no circuit breaker. That's why on March 12th, we moved 40%, because price is, it's essentially one of the only markets which is freely traded, truly freely traded. Every time if you go to finance literature, people really talk about continuous price and continuous trading. Now in crypto, because it started trading only in 2010, and it's a much newer asset class. So it's kind of started in that generation where it is already being traded 24/7, and it is already being traded. There is no circuit breakers on it.
Right.
And now what that does is it demands that when you provide leverage on it, you do a real-time check. So every time a price changes, you will kind of have to see if the losses are more than the margin, and if when that is looking close, you start to liquidate. So you have to build your risk systems in a very different way to how you would build if you are a CME, or if you're a HKSE, or if you are a NASDAQ. And that's why, and this is also evident in data, if you go and see CME futures, the margin requirement on those is quite high. At some point, it was 44%, the margin requirement.
Right.
On Delta, other derivative exchanges, margin requirement is 1%. So on Delta, you can keep 1% and take a position. So you can keep 1 Bitcoin and take position of 100 Bitcoins. On CME, you'll have to keep 44 Bitcoins to take a position of 100 Bitcoins. And the reason that margin is so high is because they close their markets and they open it back up at a time, just the way they do it for other assets. And that they span margin, which kind of takes the volatility of the asset class and tries to predict how much can the asset move during a day. And what that gives you is a pretty high number. So now from a customer's point of view, this puts, cryptocurrency exchanges at a much higher it makes them much more attractive, because you can take a much higher position if you are confident of the, if you can take much higher position with the same amount of capital. So it's also evident in data. And now this problem becomes further complex when you have multiple currencies. So if you have a risk engine that is checking risk on 100 currencies at the same time, so what it does is it has to kind of do a combined risk check. That you have some profits here, you have some losses there. Price of 100 assets is moving together. How do you make sure that on all positions put together, your losses are not more than the money you have kept? So you have to do a lot. So your systems are under tremendous pressure, and you have to build an architecture that is able to do things faster. And that is where a lot of work has gone from our side. And I think we started to work on that pretty early, much earlier as compared to other people, simply because we were pretty much the first to launch altcoins futures. We realized this pretty early in the game, way back in 2019, first quarter, that to be able to offer leverage on so many coins, we will need systems that can handle that. So we built those systems, and now we have tech where we can handle, like I said, 100 coins without a problem. The reason we have only 35 at this point in time is not so much on the technology side, is more on the liquidity on the spot side. So there's a business angle to it more than a tech angle to it.
I see. So I want to ask you then, about derivatives in DeFi markets specifically. There's been such an increase in focus in both in derivatives and spot markets on DeFi and on altcoins more generally.
Yes.
But you did a report on compound recently, right? So
Yes.
yes. So
Yes.
can you share a little bit about that?
Yeah. So we did a report on compound, and then we see the price of compound as much higher than what the price we would think, with the methodology that we have proposed.
Mm-hmm.
So, okay, first of all, let's talk about DeFi a little bit. We are pretty bullish on DeFi. We think the space is really good. We think there's a lot of growth to come in this space. But we think the space is a lot about interest rates. We
Mm-hmm.
think that the space is a lot about lending, borrowing, and it's the rates markets that will kind of boom because of DeFi. And that's why we have launched DAI interest rate swap. So
Right.
bunch of people who are kind of borrowing DAI
Mm-hmm.
from Maker's platform. So you bring Ethereum, you take out DAI, and then you use that DAI to go on other platforms and earn the yield.
Mm-hmm.
Now, what that does is it kind of exposes you to the interest rate of DAI. So essentially, you are trading interest rates, right? You're trading interest rate of DAI versus interest rate of the asset that you are earning yield for, right?
Right.
And that's why you chose stablecoin or DAI because it reduces the price risk of the underlying. But you have a risk to the interest rate, and this risk is if the Maker platform changes rates on borrowing of DAI, then you have a higher rate to pay, and this can kind of change your trade. So if you're not earning as much on the uh, on compound or wherever you are lending that DAI out, then it might not be a profitable trade for you. So essentially, what you're doing is bringing collateral, borrowing DAI, and then using that DAI to and lending it out on other platforms.
Mm-hmm.
So you're exposed to the borrow rate. Now, that is why we have come out with a product where you can lock that rate. You can lock that rate over a period of time, because if you see the history of that rate, in February this year it was 4%, in March it went to 8%. At some point last year it was as high as 19%, if I'm not wrong. I think I remember the numbers correctly, but yeah.
Mm-hmm.
So we have launched a product where you can come and fix the rate of DAI. That look, my borrow is going to remain at 0.5% or 1%, and then whatever the extra, if the rate increases, then somebody will kind of compensate for me. So you have a fixed floating swap where you earn the floating leg and you pay the fixed leg. So you have kind of made your borrowing at a fixed cost.
Okay.
Now, when it comes to compound, now we saw that and we came out with this product, and there is demand for it, more from people who are borrowing in larger quantity. Now, what's happening on compound is very different. So there was huge. So there is about 3,000 or 2,880 to be, I think, number of compound tokens that are given out every day, right?
Mm-hmm.
And now a lot of people went to compound and deposited their money. Because yes, these were tokens who were giving out to those who were providing liquidity on compound, and the compound token was rising in itself. So more and more people were providing, liquidity because they were getting tokens. So it kind of created a virtuous cycle for compound token,
I see.
because the more people provided liquidity, the more total value locked increased. So more people got excited about the token, and more people, and more the price went up. And because the price went up, because that token was given as the reward, or kind of given as the yield, so more people wanted to kind of come to the protocol and lend more money. So
Mm-hmm.
yeah, if you lend, you earn an interest in compound, and the price of interest goes up. When other people see that, they think, okay, yeah, this is growing much faster. The amount that is available or locked in the protocol is going higher, and more supply comes in. And but this is not sustainable, because this is highly dependent on the price of compound token. And this cycle kind of stops where the price of compound token starts to come off. And now that is what we are seeing, there's a limited supply of compound token. So this number of tokens does not increase if more depositors come in, right? So
Right.
the price is the only variable price is the only parameter here. And if the price doesn't go up, then this farming becomes unattractive. So essentially what we predicted was that, look, this will attract money in the beginning, there'll be few people who will be coming and putting in a lot of money in compound tokens, and then they will be kind of continuously selling compound token because they are the ones who are earning most of it, and there's a daily supply that they are getting. And as as this price starts to come off, it will become less and less attractive for others to kind of provide liquidity. So this whole cycle that was virtuous in the beginning and was providing or fueling more liquidity on compound protocol will kind of reverse and become a vicious cycle, and it will kind of start to unwind itself. Because now, if you put money on compound, it is a crowded marketplace, so there's not that many compound tokens that will come in your share, because the supply is fixed. Plus, the price of token is also coming off because those who are getting compound on a daily basis are kind of offloading it. So that will put pressure on the price, and it will start to unwind. And that is why we predicted that look, most of this book that has been created will unwind. So we looked at it like a bank. So what happens in a bank? Some people provide money, and then the bank lends it out to others, right? This is what is happening here as well. People are providing money or cryptocurrencies, and then there are others who are borrowing from those cryptocurrencies. So essentially, it's basically a decentralized bank. It's working like that. And now the return that the bank is providing is totally dependent on the price of compound. And if there is enough number of people who are selling compound, and those who have the bigger share of this daily reward, if they start to unwind it, it will start to come off. And that is why we feel that the entire book will kind of unwind. And if not entire book, most of the book will unwind. And that is why we put a target of, or we calculated that the price will kind of come back to about $40 or so.
Okay. Yes. Thank you for sharing that. So, and I want to ask you all sort of more generally, where you see the derivatives market heading, keeping in mind the things that we've talked about with this period of Bitcoin stagnancy, all of these altcoins becoming more popular, DeFi specifically becoming more popular, and perhaps, also a little bit overvalued. Where do you see all of this headed, towards the end of this year and beyond? What are the trends that you see developing in this moment?
So I think, like I said at the beginning of the conversation, I think the market will, we are in an explosion, and this growth will, on the derivative side, will continue to happen, and we will probably see this for next 5 years. So, and it looks like we are on a cusp of another rally in cryptocurrencies, and this rally is primarily going to happen in the derivative space. Of course, no rally is, it's not like the spot will not participate. That is the gateway for more money to come into cryptocurrency space. So that will happen. But a big part of this rally will kind of play out in the derivative space. Our thesis is that, look, we will reach to a point where derivatives volumes will be 5 times the size of spot volumes in the next 5 years. The areas that we see kind of growing much faster than others are, one is Bitcoin options, Ethereum. So option space is something that we are really bullish on. And we feel that it will open up a lot of trades for a lot of, traders who look to go for staple option selling, or, kind of trying to trade the market range. So those kind of people will have a decent participation in the market, and we will see good amount of activity on that front. That is one area we are really bullish about. We think that Bitcoin futures volumes will start to pick up a lot and start to compete with perpetual swaps volumes. So that's a good, that will be a shift that we can see. And the reason I say that is because perpetual swap tends to be more expensive than Bitcoin futures. And we also see, and if you see a bunch of these altcoins, they have perpetual swaps available on different platforms, on Delta, now Binance, and a few others as well. But yeah, not that many futures. And this is where I think a change will happen. People start to move towards futures more. We will see a lot of activity on the interest rate side. And I think DeFi is proof of that. That has already started to happen in space. So crypto interest rates, which were kind of all over the place in the last 2 years, collateralized rates were very different, uncollateralized rates were very different, rates on Bitcoin futures were very different, rates on different maturities were very different. I think that space will kind of start to come together, and you will have, so lending, borrowing on decentralized platforms, which is completely collateralized, has already started to crystallize, right?
Mhm.
There's big money that is involved now. We've seen strong growth there, and now some of these players, particularly, players like Aave, they are also moving towards uncollateralized lending. So that activity will start to get more and more formal. And then, we will start to see derivatives on interest rates pick up as well. So if you look at interest rate derivatives, they are a $350 trillion market in traditional asset markets. So that's a huge market that has not even opened up in cryptos as of yet. And we'll see a bunch of activity on the fixed floating swap on rates. We'll see a bunch of activity on people, selling the expensive. So kind of trying to take the advantage of rate discrepancy in rates on different platforms. And yeah, those are the kind of trends that we see coming in this space. And yeah, we are also positioning to take advantage of those.
Pankaj, I want to thank you so much for your time. It's been so fascinating to talk to you, and I feel like there's just so much insight that you shared. Before we go, I want to ask you where our listeners might be able to find out more about you or about Delta.
Sure. So our website is very simple. It's delta.exchange. All on Twitter, you can find us with our handle delta_exchange. So it's all given on the website as well. If you want to find me, I am available on Twitter, Telegram. My handle on Twitter is Balani Pankaj. It's very easy to find, just my last name and first name. And yeah, I can also share these social links with you for the description. So I think that should help.
Yes, absolutely. So, and one last question, if
Yeah.
somebody's listening to this and there's one thing that you would want them to take away from this conversation, what would that be?
So if you have, been looking at the derivatives market, and if you have been surprised with the growth on those markets, and if you think that this is, too good, then I think this is just the first leg of this, derivatives market activity. There'll be a huge, and I've seen a lot of people getting a little. Okay. Another thing that people get confused with are derivatives bad? So if you can short Bitcoin, is that bad for the ecosystem? No, they are not bad. They're actually good, because what it does is it reduces the long-term volatility. If you clear the froth at every step of the level, you have a more sustained rally. And because of derivatives, what you will see is that the next leg up that we take on Bitcoin, we won't come down as much as we came down the last time. So you won't see markets coming down 80% from the peak. You will still see markets coming down quite a bit from the peak, but not 80-90%, because you have futures available that will kind of provide people a way to hedge, and that will make the allocation a lot more sticky. So it's something that's really good for the ecosystem, and I think it will kind of make ecosystem a lot more robust. And yeah, come to Delta and trade with us and experience the different products that we offer.
Absolutely. Pankaj, thank you so much for your time.
Thanks a lot, Rachel. It was very nice speaking with you, and it's a pleasure to be here, and I look forward to hearing the podcast.
Definitely.